We're going to stay on the commodities theme here because gold is the big mover, been absolutely decimated this morning. Prices are at a 3-year low, heading for their biggest loss since at least 1920. Silver beaten down to under $20 an ounce. We have to bring in Alex Steele, our markets reporter, for more. What is the takeaway from this market rout? When does it end, Alex?
Well, Sarah, if you would have asked me if we would have seen $1,200 gold today, I would have never believed it. But prices were hit pretty big from selling in Asia. Commerce Bank calling that move technical. Then there was another leg down to session lows when the rupee hit a record low versus the dollar. India, of course, one of the biggest buyers of physical metal, and Michael Lewis of Deutsche Bank thinks there could be more downside to go. But Michael Lewis, let's hear what he has to say. Listen in.
What we're seeing is this massive premium in gold being eroded over time and eliminated, particularly versus physical assets such as oil and copper and versus financial assets like the S&P. So I think there has been liquidation of certain clients that we've seen, and I think we've probably got more to run on this.
Lewis also says that 40% of gold is held by this investor money. So basically think of it as a very large central bank with the power of liquidation, Sarah.
And I'm looking at silver, also down, following in gold's footsteps, but it's a little bit different. First of all, it's not falling as hard, and also we've noticed that exchange-traded funds, ETF flows, have held up for silver. Why?
Yeah, it's really interesting. Silver tends to track gold, but while investors have fled from gold exchange-traded funds, dumping almost 10 million ounces this year, silver investors have actually bought 38 million ounces. Well, why? Well, half of the silver out there is for industrial uses, anything from your iPhone to your car to your solar panel unit. Although near-term analysts are negative on silver, take UBS, for example, downgrading its target to 17.50 from 26 for the next month. They are they're constructive longer term, I should say, as the global economy improves. Industrials hat will take center stage for silver.